Welcome back to very last market update of this season. We are wrapping up the year that has been a very fast and an interesting year. And here we are in December, generally the slowest month of the year in a Calgary's real estate market. I'm Uros Markovic, Calgary area realtor, and today we're going to review what happened in November and tell you everything you need to know about it. In November, we returned back to a seasonal norms, with sales declining to just under 1,800 units, our 400 unit reduction from the previous month data, which was higher than we typically see for October. November 2024 was about 1% higher than November of 2023, so we are back to what we expect to see at this time of the year in terms of overall market activity. I would like to talk to you about pricing now. With respect to pricing, another small drop has been reported by Calgary Real Estate Board. What is significant though is that it is now the 5th consecutive month that we have seen price drop. November's benchmark price across all home types was $587,500, a full $20,000 less than what we observed at the peak of the market in July. It is also in line with where the pricing was in February of this year, meaning that we have given up nearly half of the gains we observed over the first half of 2024. In the later half of the year, Calgary moved out of the seller's market conditions towards balanced and welcome sign for buyers that have been on the sidelines of the last couple of years when buyer demand far outstripped available inventory and pushed prices up by double digits year over year. So many are wondering if we will tip over into genuine buyer's market conditions in 2025. So, are we having a buyer's market pretty soon? To get that answer, you will need to dig deeper in the data underlying the reported statistics to conclude as where our market is heading. Because very rarely we stay in a balanced market for long. But we are at balanced market now with the months of supply coming at 2.42 in November. What is interesting about the last 3 months is that as soon as we achieved balanced, we have largely stayed there for 90 days. That gives confidence to the notion that we could have hit the bottom in terms of demand for the moment, as the trajectory observed from April to September, essentially pronounced drive towards buyer's condition, has been halted and the market has stayed balanced to finish off the year. So you're probably wondering what is going to be in 2025, how it's going to look like. But as I mentioned previously, to get an idea of what this could look like, turning the corner into 2025, we need to dive a little bit deeper into the underlying segments of data that feed into overall months of supply metric. As we have an extra for this month's set of classes versus locations in Calgary. From this graph you will see that is actually apartment asset class that is bringing up the months of supply numbers, as all others are still in a seller's market territory. Northeast has market conditions for condos that nearly mirrors the worst years of the downturn, with nearly 6 months of supply on the market currently. However, almost all locations are in a balanced market or buyer's conditions, and it pertains to condo apartments. The remaining segment and locations in Calgary are quite healthy, which is a signal that the market is positioned for another growth year of 2025. Just not likely the apartment condo products. So I would like to give my advice for buyers and sellers. What advice do I have for condo buyers and sellers? Well, at this particular moment, I would very much be careful of getting into pre-construction condos. When I say pre-construction condos, I'm thinking of getting into them right now because it takes so long to get them built. From now, you're probably looking into another 12 to even 24 months. Given that we are already in a balanced market condition now and pre-construction deals do often take 2 or 3 years to be complete, I think it is highly likely that this segment will be oversupplied by this time next year and in a buyer's market conditions for a few years after. But other segments, particularly raw townhouses, are still experiencing high demand relative to available inventory and present a much less risky option for buyers seeking an affordable price point and strata ownership experience. But it is not just communities and asset classes that give us more clues as to where the market is heading. We can also draw some insight from the months of supply metric across pricing segments. So I would like you to look into this graph carefully. This distribution is very similar to what we saw the last month, but each pricing bin has pushed a little closer towards buyer's market condition over the last month. That being said, we can see the condo showing up between $300,000 and $400,000 segment, as the average price of a condo was $338,000 for November. The $500,000 to $700,000 range, though, is still very much in seller's market, as this segment would contain starter homes and smaller suburban properties. Even the $700,000 to $1 million market is not oversupplied at present, showing balanced conditions well in excess of the average sale price of a piece of a real estate in Calgary. So for those reasons, there is no real need to fear a drastic change heading into 2025, and we would expect the market to be tight again in the first half of the year. This is all what I have for you for this month. Thank you very much for watching and for your support this year. I value your loyalty and I wish you all the best in this holiday season. Merry Christmas and Happy New Year, and see you in January.